The broadcast is now starting. All attendees are in listen-only mode.
Hello, good morning, and thank you for joining. This is Kyle Flynn from ST Equipment and Technology. I'll pass it over to Kurt Rosentrader, who will give an introduction.
Good morning, everyone. Thank you very much for being able to attend our virtual symposium this year. This is the third of three webinars so far, and unfortunately we were not able to meet in Omaha during the second week in May. So for those of you whom we've met before, welcome back, and for those of you that this is new for you, welcome. We definitely appreciate the opportunity to talk to you about distillers grains and co-products from biofuels and from alcohol production. So I'm with the Distillers Grains Technology Council, which some of you know is located at Iowa State University. This is our website, distillersgrains.org or distillersgrains.com. Either one will work. But for those of you not familiar with our organization was founded in 1945 by the beverage alcohol industry. And since 1945, we have continued to work with the beverage producers as well as the biofuels producers in developing new approaches, new technologies, and new markets for the feed products that these companies manufacture. And just to remind you, currently, when we think about biofuels, co-products, and beverage alcohol co-products, primarily we're thinking beef, dairy, swine, and poultry. However, just like the alcohol industry continues to evolve, the ability to produce different types of animal feed products is also evolving, and our markets are evolving. And the two primary markets that are in front of us at the moment include aquaculture production and pet food production. And I think if you've joined any of the previous webinars, you'll see that the industry is indeed evolving and changing, and the change is becoming more rapid as more companies are adopting new technologies and new approaches. And we can't forget our traditional markets. We can't forget our traditional co-products, but we are moving into new opportunities for new products. And so just to reiterate, we have a mission, and what we try to do is work not only with alcohol producers, but also with livestock producers and livestock nutritionists as we move forward and try to increase the understanding of what it is that our industry is producing in terms of animal feed products. And we also interface extensively with the federal and state governments in terms of serving as a voice for our industries. And that includes the FDA as well as EPA. So for those of you that are not familiar with what we do, we generally have a yearly symposium. This is the first time in many decades that we've not had a live symposium, but we are hoping that we have a live symposium next year. So we do have several committees. If you are interested in serving on a committee, please let us know. In particular, we have active committees looking at proficiency testing program for the industry, looking at mycotoxin and proximate proficiency in terms of the third-party service laboratories, but also laboratories at ethanol plants and alcohol plants. We have an ingredient definitions committee who's very active in pulling together new potential definitions for our industry as we see more products coming into the marketplace. And we also have our newest committee is related to trade, and so looking at trade rules and those types of things. Like I said, we work closely with the FDA. We also work with EPA. We also work with USDA GIPSA, as well as AFCO, which is the Association of American Feed Control Officials. And this is in terms of promoting science-based regulations and definitions. So we do have extensive communication with our committees and our board members, so please let me know if this is something that you're interested in. And some of you may know, but we've been producing and marketing distillers products since the 1800s. And so we've got information that goes back to that point in time. So for those of you that were on the webinar last month, we introduced basically the product of our ingredient definitions committee's work for the last couple of years. As we're moving towards developing some new definitions for our industry, the first thing that we wanted to do was establish, well, what products are currently being sold into the marketplace, both the beverage alcohol as well as the biofuel production. And really, we've got two main buckets that we are producing animal feed products in, and those are either what are considered traditional distillers products, or the other bucket is some of the newer evolving biorefinery products. And they're not the same, they're different. The traditional distillers products, as many of you know, distillers dried grains with solubles, DDGS, or DDG without the solubles, de-oiled distillers grains, DDGS with bran. Some companies also sell syrup, and many companies are selling the distillers oil. So those are some of the traditional products that have been manufactured and sold into the marketplace, but we are seeing new products coming into the marketplace that are able to be sold because there are definitions that fit. But some of the newer products, we will definitely have to develop some new definitions. But the current products include selling fiber with syrup, selling high-pro DDG, notice it's not DDGS, fermentation proteins, and distillers yeast. These are some of the newer products that are coming into the market. So stay tuned. We're going to be seeing even more products, especially on the biorefinery side, over the next couple of years. And the previous two webinars and today's webinar are also going to be talking about some of the new processes that are producing some newer products. So it's an exciting time to be in the industry. So we've had, this is the third webinar so far in our sequence, back in May and June, today, July 8th, and then we are aiming to have our fourth webinar either late August or early September. So stay tuned. We will make sure that you receive an email blast after today with information about the upcoming webinar for August or September, but we will also make sure that you get a link to the recording of today. So for those of you that have been able or not able to attend our previous webinars, go to our distillersgrains.org or distillersgrains.com website, and you'll be able to click on the link on our Distillers Grains page, and you can watch the previous two webinars. And in about a week or so, we'll have today's file uploaded as well, so you'll be able to watch that at your convenience if you're interested. So as with the previous webinars, today we're going to be talking about economics, we're going to be talking about new products, new processes, and we're also going to be addressing some nutrition related issues. So unfortunately, we weren't able to meet in person in Omaha this year, but next year our plan is to meet in Louisville, Kentucky. So make note of this, May 16th through 18th. Unless the coronavirus is still around and we don't have a vaccine yet. But we're going to keep our fingers crossed, because hopefully we'll all be meeting in person next year in Louisville. So I'd like to take just a moment to say thank you very much to two organizations that are providing support for today's webinar, and that is the ST Equipment and Technologies and Beta Tech Hop Products. So thank you to both of the companies who have provided support. And with that, I would like to turn it back to Kyle. And Kyle will be our first speaker today.
Thank you, Kurt. Thank you very much. Okay, hopefully you should all be able to see my slides. So thank you for that introduction, Kurt. Just very briefly, my name is Kyle Flynn. I'm the Director of Business Development for ST Equipment and Technology. I've been with ST for about 12 years now. 10 years was on the technical side and process development, and the past 2 years mostly on the commercial side. And I want to talk to you today about our technology, which has been around for about 30 years now. as a commercialized processing technology for separating fine dry powders. And we have recently been applying it to separating distillers grains to enhance protein by removing fiber. This is relatively new work for us, but it's very exciting in that we're able to take a piece of technology that's commercialized in other applications and apply it to distillers grains processing. So just to start off, one key question here is why do this, right? Why? What is the drive for high protein distillers grain? And the answer there is that consistently distillers grain is presented as an undervalued feed ingredient, right? When you look at shadow pricing studies, the distillers grain will come in at somewhere between $230 to $280 a ton. But this is a pretty large disconnect from where the price that's actually recognized in the market, around $140 to $170 a ton, depending on where you are. And really, a key driver there, key reason for that is that distillers grain isn't really perfectly suited for any species, right? So the protein content is a bit too high for what's really needed for ruminant feed, and yet it's a bit too low for other applications like aquaculture or poultry or swine. And so one approach is to take the distiller's grain as it is today and to modify it so that really it can be suited for both species. It can be, the fiber can be directed towards the ruminant species, and the high protein fraction can realize a higher value in the marketplace going towards aquaculture or poultry or other animals that need the higher protein. And so this is a picture of our technology, the ST Equipment and Technology Separator. It's an entirely dry process. It's an electrostatic process, so there's no water or chemicals required. And it's a high rate, fully commercialized electrostatic separator. We've been using this technology for about 30 years now in processing other materials, mostly minerals and waste from coal power plants. And the way it works is that material is fed into the top of the separator, and in between, in the inside of the separator, is two parallel plate electrodes and a high-speed open mesh belt that conveys material in and out of the separator. And what's happening is these materials are contacting each other in the separator. In this case, it's distillers grain protein and distillers grain fiber fractions, and they're actually transferring electrical charge. And the way I describe this is very analogous to when you're somewhere cold and dry in the winter and you rub your feet on a carpet and you touch a doorknob, you get shocked, right? Really, this technology is exploiting that same phenomenon. So as it turns out, plant protein and plant fiber, in this case, the corn protein and fiber, actually will transfer different electrical charge when they contact each other. And so what's happening is these materials are contacting each other in our separator. They're transferring that charge. The protein will charge positive and the fiber fraction will charge negative. And then they move towards the oppositely charged electrodes in the separator and are conveyed out by a high-speed open mesh belt. So this is it's a continuous process. Material is leaving the separator as it's coming in. It has a feed rate of about 15 to 20 tons per hour for distiller's grain. It's very low energy consumption. So the separator is maintaining a high voltage electric field, but it's very little current flow from the electric field. So the power supplies required are quite small. And in fact, most of the energy consumed is by the belt motors to drive the belt through the separator. And as pointed out earlier, this separation technique is not new. This has been applied in other industries for many years. It's a fully commercialized process. Just a little bit about who we are. So ST Equipment and Technology is a wholly owned subsidiary of the Titan Cement Group. Titan Cement Group is based out of Greece. They're about 100 years old. They have presence in 10 or 11 countries, mostly in cement and building materials. We've been owned by Titan since 2002. And really the core reason for being owned by Titan was that the technology for many years was applied for processing of waste from coal power plants, fly ash. And that fly ash goes into concrete products as a cement replacement. So for many years, the exclusive focus of ST Equipment and Technology was on supplying this equipment for the cement and building materials industry. So as mentioned earlier, the Distillers Grain application is relatively new, but an exciting one for us. And so one key feature of this technology that we like to point out is that although the process is new for distillers grain, the technology itself is commercially established. So we have sold more than 20 separators around the world for processing fly ash. For fly ash processing, these separators can accept up to 40 tons per hour of material coming in. And we have sold a number of units into mineral separation, so non-fly ash applications. And again, we're a relatively small part of the Titan group. So Titan has about 4,500 employees worldwide. ST Equipment and Technology has about 30 full-time employees. Most of us are located in our technical center outside of Boston, Massachusetts, where the company was founded. And we have business development professionals that work in other geographies around the world. And so I'll just describe a little bit about the process and how it works. So shown here is one of our separators for processing fly ash, which is installed in a power station in South Korea. The separator is a very simple operating principle. So material, in this case, for this separator, it's fly ash, falls into the top of the distributor air slide, which is shown in the dark gray here. The material disperses across the air slide and then will fall into one of 3 feed ports, feed locations along the separator. And then inside the separator, there's 2 parallel plates and a high-speed belt that conveys material in and out of the separator. The belt's operating counter current, so it will run along the top electrode in one direction and return through the rollers and run along the bottom electrode in the opposing direction. So the effect of that is that there's a high-speed, high-shear zone where these particles are colliding with each other and transferring electrical charge. And again, what the phenomenon that's being used here is electrostatic separation, and in particular, it's tribocharging, and tribo means contact, so contact electrical charging. This is not a new phenomenon, obviously. This has been known for many years, really since ancient times. A classic example I described earlier would be rubbing your feet on a carpet and somewhere that's been dry during the winter, right? Another example is, if you rub a balloon on your hair, right, how your hair gets charged and will stand up on end. Well, the phenomenon that we're exploiting is very similar. So what's happening is these 2 different materials, in this case, the protein and the fiber from distillers grain, have a propensity to take electrons. So the fiber will actually take electrons from the protein fraction of the plant. And what's happening is when this fiber and the protein collide, at the surface of these materials, the fiber will actually strip an electron off of the protein and will become negatively charged. This electron transfer is happening at the macro scale over the entire separator length as these materials are colliding with each other. But this negatively charged fiber will move towards the positively charged fraction in the separator and be conveyed out of the separator by the action of the belt. So this electrostatic processing is very useful in a number of different applications. So minerals processing, for example, in recycling, where in recycling, different types of plastic are being sorted from each other at a much coarser particle size. What's unique about this separation process is that it's very well suited towards fine powders, unlike recycling applications, which are relatively coarse, a couple hundred microns or even a couple millimeters in size. And so just to show what's happening inside the separator, this is a schematic view of the side of the separator. And so again, material will fall into the top of the separator and be distributed through the air slide and fall into one of the open feed ports. And then inside the separator, there's a top electrode and a bottom electrode. So here it's shown that the top electrode is charged negative and the bottom electrode is charged positive. And what's happening is these particles, the mixture of particles, are falling into the separator, represented here by the black and the gray dots. And so those different materials are contacting each other. As the belt is moving through the separator, it's causing them to collide, and then they're transferring this electrical charge. And so now the positively charged particles, right, shown as the dark color here, are pulled towards the negative electrode, and then they're conveyed out of the separator by the belt moving from left to right, as shown in the diagram here. And then the negatively charged particles will fall to the bottom electrode, the positive electrode, and be conveyed out of the separator in the left direction as the belt returns across the bottom electrode. So this has a number of benefits. One is that the electrode spacing is very tight. So we have a very high voltage electric field, but we don't require very high voltages to do that because the electrode, the field strength is very high because the electrodes are close. We don't have a very wide distance in between the two electrodes. That allows us to get away with relatively small power supplies and makes it relatively easy to keep the fields isolated. It also gives us a very high efficiency because we have such a high field strength through the separator electric field. It allows for constant charging and recharging of these materials as the belt scrapes material off of the top and bottom electrode. These materials contact each other again, transfer this charge, and continue to be concentrated as they move through the length of the separator. And so again, the work with Distillers Grain is relatively new but exciting for us. And what we've shown here is an example of one of our separations of Distillers Grain at pilot scale. So this was a Distillers Grain, a commercial Distillers Grain that was taken from an ethanol plant in the US. It was ground so that the protein and the fiber are physically detached from each other. That's a key piece because what we're doing here is we're doing what's called a physical separation. We're actually removing one particle from another. So you can see here that the Distillers Grain was fractionated into two sides, a high fiber Distillers Grain, which would be the ruminant co-product, and a high protein Distillers Grain, which went from a 35 protein dry basis up to a 50% protein. And most of that is achieved by removing fiber. Crude fiber is shown to go from 7% down to 4%. Very little change in the crude fat content. Big reduction, however, in the NDF. So we saw the starting material had a 27% NDF, and the high protein had a 14% NDF. We've also done a complete amino acid profile for the high protein and the low protein material. So you can see here again the 35% dry basis protein starting material reached 49% protein and high protein fraction, and the low protein fraction had a 27%. And again, you can see that most of the movement here occurred through moving NDF. And as predicted, the amino acid profile really followed the protein. And you can see what we've done is we've compared the amino acid profile of the high protein Distillers Grain to soybean meal. So the orange is a standard soybean meal amino acid profile. The yellow is the STET high protein Distillers Grain, and the blue is the starting material, the starting Distillers Grain to the STET process. So you can see in all cases, the high protein Distillers Grain, the STET high protein Distillers Grain was substantially enhanced over the starting material, the blue line. And really, this is across the board in the amino acid profile. And in some cases, was reasonably close to the soybean meal amino acid profile. So a key point of this process is that there's no loss of any of the distiller's grain that's run through the electrostatic separator. So just as a mass balance perspective, 1 ton of distiller's grain is going to give you a combined 1 ton of products. You're going to have a range of high fiber material, so 0.65 to 0.8 tons per ton of input. And you're going to have a protein-rich fraction, a higher value component, that'll be between 20 and 35% of the incoming material at around the 50% protein content. Another key piece of this technology is that it's entirely dry. So this technology is really a bolt-on addition to an ethanol process. So it wouldn't require any modification to the existing ethanol plant in terms of anything that's currently a wet stream. So it's a bolt-on addition is what we like to call it. So essentially, the distiller's grain would be dried as it is today. It would be taken to a milling system. The material would be milled to the appropriate size, sent to the STET separator, and then the two products would be generated by the ST separator, put into storage, and then sold. So there's no downtime, there's no modification of the ethanol process, there's no adjustment to any of the wet streams. It would be essentially taking the distiller's grain really as it's produced today. So this process offers a couple key benefits to ethanol plants. So the one most important, of course, is to improve the margins by increasing the revenue of the co-products, right? To capture some of the quickly growing high protein distiller's grain market. A key benefit of that is that this process requires no modification of the existing ethanol production process to do that. So it's a bolt-on change to an ethanol facility. It could be located right outside the ethanol plant, or it could be even located right in front of a feed mill. It really just requires distiller's grain to come into the process as it's produced today. And so there's no downtime to the ethanol production process to install the separation system. Another key piece too is that the system can be installed in phases. So you don't have to convert the entire plant over to producing high protein distiller's grain. You could start with 10 or 20 or 50% of the exiting distiller's grain today and convert that to a high protein fraction. It's very easy to install the technology in lines using that. Using the formula that a single separator line is going to handle about 15 to 20 tons per hour of input distiller's grain. And so we do have a fully equipped test facility in our technical center in Needham, Massachusetts, again, right outside of Boston. So we have a bench scale separator where we can do what we call a proof of concept separation. We can take a customer distiller's grain sample, run it through the separator, and send back the separated products to show the high protein and low protein fractions. We also have pilot scale capability where we can generate feed samples that will allow for animal feed trials as needed by a customer. And we're fully equipped in terms of grinding capability. We have particle size analysis. We have bench scale milling equipment, and we have protein analysis, so we can measure all of the fractions of protein from the materials leaving our separator. And that concludes my presentation. Thank you a lot for your attention, and feel free to reach out if you have any questions. We'll be taking questions from all of the participants at the end of the presentation. And Ron, I will go ahead and pass it over to you. And Ron Sarver will be giving our next presentation.
Thank you, Kyle. Uh, for those of you who may not know me, I'm Ron Sarver. I work for Neogen. I've been with Neogen about 11 years. I'm going to talk to you today about studies we've conducted on deoxynivalenol, DON, often found in grain products. Depending on the year the grain is harvested and how the moisture content and environmental influences of the year lead to different toxin outbreaks. We've done a 3-year study of several different laboratories submitting their results on samples that were check samples of known quantities of DON. I'm going to give you a little bit of an overview of Neogen, talk a little bit about the study protocol, then dive into the results for the 3-year study, and also give a small forecast of mycotoxins for the U.S. market. So Neogen is involved in products from farm to fork. We have 3 divisions: a food safety division, animal safety division, and a genomics division. The food safety is located in Lansing, Michigan, is the location where I'm located. We are predominantly involved in development of rapid diagnostic kits for various materials, mycotoxins included, allergens, microorganisms. We have a sanitation verification system using ATP. As I mentioned, the pathogen tests, and we also, through our genomics headquarters in Lincoln, have next-gen genome sequencing capabilities. The animal safety group offers veterinary instruments and supplies, cleaners and disinfectant products, and insecticides and rodenticides as well. As I mentioned, our group in Lansing is predominantly involved in the food safety applications, although we do assist with the animal safety cleaners and disinfectants. We have rapid diagnostic tests for the toxins, the allergens. We also have culture media that's been harmonized, and we offer that worldwide. So now on to the DON interlaboratory study that was conducted over a 3-year period with the same check samples. So there were 7 participating labs. The samples were blind coded and also included a liquid standard solution. The labs that participated were the Neogen Lansing Analytical Lab. Neogen Europe also has an analytical lab, and they participated. USDA, FGIS, GIPSA, Trilogy, Royal Canin, and North Dakota State. The labs aren't listed in order in this report, and that we've deliberately not included the lab names in the report, except I will show you which one was the Neogen Lansing lab. We provided an approximate concentration range so the samples could be diluted into the appropriate calibration for the laboratory. The samples were 50-gram wheat and 50-gram corn samples, with the amount of DON listed as shown below: a 0.5, a 2.1 ppm, 4.5, and a 4.7 ppm, and then a liquid standard at 25 ppm. Each laboratory analyzed the samples using their protocol and provided a summary of their protocol to us. In the first round, 3 sets of samples were analyzed in triplicate on multiple days, and then in subsequent rounds, about 1 year apart, one set of samples were analyzed in triplicate. Shown here are the results for the 0.5 nominal ppm Don wheat check sample over a 3-year period. The table on the right has the raw data from the 7 labs. Neogen Lansing lab is lab 3. The figure on the left shows a statistical summary of those results, which includes the mean, the 95% confidence intervals, and the individual data points in gray. The points in red are suspect outliers based on deviation from the mean by greater than the 95% confidence interval. The mean of 0.35 that was obtained by lab 7, as you can see, was statistically lower than the other means for the other labs. The mean of 0.3 obtained by lab 5 for the first year of sampling was low compared to the 0.48 mean in the second year, and then a 0.84 mean on the last testing in 2020. So that indicates there's some long-term drift issues with that laboratory. You can see lab 3, Neogen, we've had very good precision over the 3 years. Largely that's partly due to we instituted a check sample that we run with every sample we analyze, and that is the same sample until we run out, and then we have a new check sample that we use, but we have an overlap period to check for any drift in between that. So we've managed to keep our long-term drift at a minimum. C Lab 1 participated only in the first or only in the latest round of testing, and their results were higher than the global average for the other labs. Labs 2, 3, 4, 5, and 6, the means were all statistically equivalent, but as you can see, lab 5 with the large variability from year to year, it is important then to know, what lab is analyzing your samples and to see how they've performed in proficiency studies to know how accurate and precise their results are. This slide shows the results for the 2.1 ppm wheat sample over that 3-year period as well. Again, some issues come up. Lab 5 again showed some large differences for this sample, which were consistent with that first sample in that they were low 1 year, about on par with the other labs another year, and then high in this last testing. Lab 7 again showed results for the mean that were lower than the majority of the labs. Neogen lab was consistent with the bulk of the other labs, and again showed good year-to-year precision and accuracy. Lab 1 was slightly lower again for this sample. Another way to look at those results then is by the Z-score, which is an indication of how far the mean is for each result is away from the mean for the all lab means. So shown here are the all lab mean for the 0.5 sample. It came out at 0.49 with a 17% CV for all the labs. Again, there was some high variability from lab 5 that contributes to that high variability then for the all lab mean. The Neogen results were less than one z-score away from the all lab mean, except for on the 3rd week in the first round of testing. But even then, it only deviated slightly above 1 standard deviation from the all lab mean. Lab 2 was consistently biased high. You can see the mean was about 0.6 compared to the all lab mean of 0.5 ppm. Lab 7 consistently low for their results. The 2.1 sample, again, similar trends where lab 2 was high, lab 7 was low. Our lab was within 1 standard deviation, except for the 3rd week. We were right at 1 standard deviation from the all lab mean. Results for the 4.5 ppm check sample, again, shows similar trends. Lab 5 showing a low result 1 year, on par results the following year, and then high results this latest round of testing. Lab 7 statistically slightly lower than the overall lab mean, and lab 1 statistically lower with fairly high imprecision in their data as well. The Neogen data showed good consistency for the 3-year period, on par with the other labs, and then also the mean was not statistically different from labs 2, 4, 5, and 6. Results for a 4.7 ppm corn check sample over that 3-year period. Again, shows similar trends where lab 5 was showing large variability from year to year. This time, lab 4 did show a high result compared to the previous 2 years, so it did indicate that there was some long-term drift that occurred in lab 4. Their prior 2-year results were located down here, and then the latest round, the triplicate results were located here, too high compared to their previous results, which would indicate, there was an issue with long-term drift. Lab 7, again, slightly lower, not quite as low as it was for the wheat sample, so, closer to the global mean for the corn sample, whereas lab 1 was statistically lower for the corn sample than the other labs. The Neogen Lansing lab, good year-to-year precision, tight CV, and then accuracy on par with the bulk of the other labs, showing that the results were accurate and precise. Again, looking at the z-scores then for the 4.5 ppm wheat sample and the 4.7 ppm corn check samples. The overall lab mean of 3.97 for the 4.5 sample was, or nominal 4.5, indicated that this was a little bit lower than the nominal check sample. Precision 14%, not too bad. Largely, that variability was attributed to a couple labs that had fairly high standard deviations in their results. A similar trend where lab 2 had results that were at least 1 standard deviation higher than the all lab mean. For both the 4.5 ppm wheat sample and the 4.7 corn sample, high for both. And then also lab 7 was significantly lower for 2 of their weeks of the study, and also showed the higher variability, which contributed to those CVs for the all lab means. Lab 4, consistent results, except for the 4.7. They were a little bit high, close to 1 standard deviation away from the all lab mean. On a couple of the results, lab 6 had good consistency and accuracy, as well as our lab in Lansing. Good consistency, accuracy relative to the all lab means for both samples. And one of the purposes that we conduct these studies is to ensure the quality of our analytical lab, but also we use our analytical lab to benchmark the performance of the rapid test kits that we develop. So in this table here, we show the Reveal Q+ DON results, which is a lateral flow test for DON, and then compare those to the analytical results. So this table here shows just the DON Q+ results run over multiple weeks for those same check samples and for multiple samplings over those different weeks. So you can see for the 0.5 sample, the overall mean for the DON Q+ was 0.52. For the 2.1, it was 2.1. For the 4.5, it was 4.5, and for 4.7, it was 4.6. And the raw data are all here for those mean values that are shown in the table below. Analytical, Neogen analytical results for those same samples then were 0.55, 1.9, 4.2, and 4.0. And then the all lab means 0.49, 1.8, 4.0, and 3.9. So basically the all lab mean tended to be a little bit lower than the nominal value of those check samples, which was influenced some by the labs that had lower results for those samples though. So in actuality, the results of the check samples are probably, closer to the nominal values and or the Neogen's analytical results. As I mentioned, in addition to the corn and wheat samples, we also use a standard solution of DON to eliminate the issues with extraction and cleanup columns to see how the analytical labs perform for those pure analytical samples. In this case, lab 3 again is the Neogen Lansing lab for the 25 ppm DON sample. We are close to the nominal value for that sample as are labs 2, 4, 5, and 6. Lab 7, which showed lower results for some of the grain samples, also showed lower results for this standard solution. And lab 1, which only tested on 1 week or 1 year of the sampling, had higher results, closer to about 33.4 for that 25 nominal standard solution. This would tend to indicate that some of the issues with the corn and wheat samples are due to extraction and cleanup that is used by the labs for their analytical methods. We use this information then too to try to minimize the differences between the standard solutions and our extraction results for samples. But just a summary of some of the general trends then that were identified from these interlab studies. Again, Lab 7 results were consistently lower than the mean results from the other labs, including that Dawn standard solution. Results from Lab 1 had greater variability and deviated higher and lower than the other lab results. The mean results for Lab 5 were low compared to the other labs in 2019 and in line with the other labs in 2018, but higher than the other labs in 2020, again suggesting long-term drift for Lab 5, which we would recommend instituting measures to try to minimize those long-term drifts, which, as I mentioned, the Neogen Lansing lab, we have good long-term precision and accuracy with good agreement between us and labs 2 and 4. And that long-term consistency is due to implementation in 2018 of a standard check reference sample that's analyzed and trended over several year period along with the samples. And again, results for Lab 2, 3, and 4 were usually consistent with similar accuracy and precision, except for the positive bias that occurred in Lab 4 in 2020 for the 4.7 ppm corn sample and a low bias in the 4.5 wheat sample. So it does indicate that even on a particular year, a lab, if they do not have procedures in place to check for long-term drift, can give you results that are atypical of what one would expect. Lab 6 only participated in the first year of testing, and their overall results were similar but had a low bias compared to the bulk of the other labs. And finally, the Q plus Dawn results agreed well with the global ILS mean for 2018 and the Neogen Lansing Analytical lab results. So again, stressing the importance of even analytical data from different labs can vary substantially. You do have to be aware of how well the lab has performed in proficiency studies and have data to back up their performance. And then also for rapid testing results, ideally they would be linked to analytical results and show good consistency with those. Finally, some geographical areas for possible mycotoxin concerns. So these were provided by our key account manager, Matt Nichols, and Mary Godola, senior product managers that are involved in selling of the rapid kits, and they get information on where the kits are being sold, what areas are experiencing higher levels of outbreaks of certain fungus that would produce these mycotoxins. So for aflatoxin, some areas of concern this year are in the Western Great Plains regions in fields that aren't irrigated, Texas. The corn's most vulnerable in Kansas and Nebraska. Indiana may develop as a problem area if the dry conditions continue, and then the I states, including Indiana, Iowa, Illinois, will probably have the greatest impact for outbreaks for aflatoxin. For Dawn and wheat, the Mid-South, Missouri, Eastern Kansas are suspect, and recently they had a hit of 5 to 6 ppm in wheat from Southeast Kansas. Not too much in the Deep South other than the coastal areas, and then suspect areas in Western Tennessee and Missouri. For fumonisin, there always seems to be issues in the middle of the country, plus Texas. If there are issues, though, that you want to get updates, Neogen does provide weekly updates of mycotoxin field reports. In addition, if customers are interested in sending samples for analytical assays, we offer that through our website link here. We also do ELISAs and lateral flows in our labs here in Lansing. if the customer doesn't want to do those tests themselves. But they can also request the ELISA lateral flow kits to use at their own facilities, and that link is here. So with that, I will finish up, and thank you for your time.
Thank you, Ron. And next, I'll pass it to Mr. Sergio Alvarado to finish up. And Sergio, you're still muted, just so you know. And Sergio, we can see your presentation, but we're not able to hear you yet.
All right. Sorry, I had some technical issues here with the internet. That's something useful in these times.
Thank you.
All right. Just for a start, I just want to present myself. I am from Mexico. I have a Bachelor of Science in Agricultural Administrator Engineering. I had trade, and when I say trade, it's that I've been buying and selling and hedging agricultural commodities worldwide, beef meat, beef cattle, grains, DDGS, special crops. And for the last 4 years, I have been the pricing specialist of corn and DDGS for S&P Global Platts. So for a start, I need you to see this. Slide, basically saying that there is a risk when you trade, and then you read it. We're going to move forward, and this is the 5 main objectives for this presentation. Number 1, talk about S&P Global Platts, DDGS, and ethanol prices. Talk about the impact of COVID-19 on the DDGS market. Number 3, talk about the demand of DDGS mix. Number 4, talk about Brazil's corn ethanol. Number 5, talk about the indexation and examples of price risk management tools. So let's start. Who is S&P Global Platts? S&P Global Platts is a division of S&P Global, the world foremost provider of ratings, benchmarks, and analytics in the global capital and commodity markets. S&P Global, we analyze data from millions of sources that deliver meaningful, actionable insights to help increase revenue, manage risk, and make decisions with conviction. And you can see there are other companies that are part of the different divisions that we have in the company. On S&P Global Platts, we cover different markets. We're very well known on oil and electric power. And even when we are new on the agricultural markets, you can see on this chart that we cover a lot of commodities from different locations around the world. Just let me tell you that I'm going to skip some details on slides, but you can download the presentation from the hands-out notes. What is an assessment? What is an assessment? When we talk about prices in Platts, we're talking about assessments. The assessment is an accurate daily published value of the physical market. Daily published value of the physical market price of a specific. And there are several characteristics for a robust assessment, but I would like to point this one. it has to be independent and with an impartial approach. And in Platts, we're independent and we have an impartial approach. We don't sell, we don't buy, we don't have a commission for the trades. We just make an assessment. And this is very important for the people, because the people that we are in the trading business, we know that, yes, it matters the information that they gave us, but it's always most important to understand why are they giving us that information. So in the case of Platts, we're independent and we have an approach. Where does the assessment come from? It's based on daily bids, offers, and trades, market sources. We use a survey method. It's fact-based, but judgment plays a role. The sources are traders, brokers, exporters, producers, and end consumers. Basically, what we do during the day is that we have offers, we have bids, offers start to get lower, bids start to get higher or get closer, and we have a trade. And then at the end, you find the accurate published value for DDGs. And I love the first part of my job, which is to make assessment. I joke about the market, but I hate the last part of my job. That is why they pay me, to comply with the IOSCO principles. IOSCO is the International Organization of Securities Commission and is the global standard for marketing regulation. So yes, the private reporting agencies, we are regulated. On Platts, we assess DDGs for FOB Chicago truck and Sydney Orleans on barges. These are domestic markets that are like by export markets. Something important that I want to show you is to make the assessments, we have a lot of data points during the day. This is an example for Sydney Orleans. As you can see, there are some days that we have 70 data points on the day to make the assessment. By data points, I mean bids, offer, or trades. And some other days when the market is really quiet and dead, we have 10 data points to that we have a lot of information in the assessment. Something worth to mention is that we also assess ethanol. We assess Chicago terminal ethanol. The CME Chicago ethanol Platts futures is settled against the Platts Chicago Argo terminal assessment. Right. Now let's talk about the impact of COVID-19 on the DDGS market. Let's keep it simple. What happened with the COVID-19? The combination between COVID-19 pandemic and Saudi Arabia announcing unexpected oil that make gasoline demand to drop, and that make ethanol demand to drop, that drive the production to fall almost to the half levels that we usually have. So with these two things happening, number one, with lower production, we have a shortage of supply of DDGs, and that bring a rally on DDG prices. But what also happened is that with this decrease on ethanol production, there was a lot of corn that we didn't use for the ethanol production, so we lost demand for corn. Depending who you ask and how you cross the numbers, but in the case of Platts Analytics, we estimate that we lost around 500 million bushels of corn because this bomb in production. So what happened with that is now at this point we have a lot of corn, so the price of corn dropped, they fall, and DDGs after we ration the supply, prices start to drop. On this chart, we see the crush margin, the crush margin for the ethanol. We calculated this margin dividing the cost of corn per bushel by 2.8 gallons of ethanol. That's a bushel of corn can produce. And the resulting number is the cost per gallon for ethanol. Then subtract ethanol, and we have that crush margin for the ethanol. So as you can see, the crush margin were really bad after Fed, and also because there was no demand, and then we can see a rise on the crush margins, and basically was because not just because the ethanol was recovering his prices, but also because corn was really cheap. So we saw we have been seeing how the crush margin are improving, and then here we see a lower crush margin, and this happened last week because we had the USDA accuracy report saying that there were 5 million acres less of corn for the next marketing year. So that take out the supply of around 500 million bushels of corn. So that brought a rally on corn, and DDGs followed it. This is a chart that you can see all the variations that we have on prices on DDGs. This is when China was buying in 2016. This is the peak of 2018 when we had a crisis in Argentina with the soybeans over there. And this is the peak that we had with the everybody in the demand for ethanol. This is another way to do it. This is the DDGs in barges. And you can see here, this is the maximum prices that we have between 2016 and 2019. These are the minimum prices that we had between. And you can see the average for 2019. And you can see that prices right now are more or less on the average that we have for the last 4 years. So that's good news that we are getting back to the normal markets, the normal levels. Same story for FOB Chicago. You can see that when the maximum and minimum prices get closer, is the harvest for corn. Now let's talk about the demand of DDGs as part of the feed mix. So on this chart, we can see the CIF NOLA relative value to Argentina FOB of river soybean meal. So this is comparing short tons against short tons, and we have this percent. And we can see that for this period of time, between September and July, the average was a 62, and right now we are at 56 percentage of relative value. So we are below the average for this period of time, and we are well below the values that we had on September. So as a protein, DDGs is competing in the feed ration. And then we can see the relative value of DDGs to corn. Again, this is CIF NOLA, short tons against short tons. And you can see that right now we are at 116. So we are below the average for the current period from July to July. We are below the average for the same period on 2018. We are around the same level than the last year. But as you can see, the relative value is much higher than the values that we used to have on July last year. We were at 106, and now we are at 115. So we are competing. We are not competing on for energy. That's the main driver for DDGs right now. This is just to give us an example of what's happening on prices. This is the forward curve before forward curve after COVID on July 1st, just after the accurate report when the corn. So you can see here on Fed that the sellers were offering at 175 and the buyers were offering to buy at 175. And what happened is that you can see that in July they were expecting, the sellers were expecting a price of 182 and the buyers were willing to buy at 180. This is what for July on February 13th. So what happened? On July 1st, what happened is that in July we're at 166, 170, and just one day before we were at 154, 156. So you can see where the market was going in the forward curve, where the sellers and the buyers, where they want to take the market. It's the same story for corn. On corn, before the COVID-19 crisis, we have prices of $4.30 per bushel, and this is bids and offers. And you can see in July, the market was aiming for 440. And on July 1st, after the rally, we are at $4 per bushel. So we can compare this on the relative value. So this is the CDDG's relative value to seed corn forward curve. So you can see that before the COVID, the relative value that we were and sellers were looking is around 114. And for July, they were expecting a relative value of 115. And what happened on July 1st is that we have a relative value of 180. And the seller, the buyers, they are aiming to get a relative value of. Okay, now let's talk about Brazil cost ethanol. So the question is, Brazil is going to be a competitor for the US and DDGs. Right now, Brazil is competing really, really high with the US for corn and for soybeans. So what is happening on DDGs? On this chart, we can see how much corn is expected to be used to produce ethanol. We're expecting to use almost 5 million metric tons of corn to produce ethanol over there on Brazil. And this is going to give you more or less around 1.3 million of DDGs. So you can say that 1 million metric tons of DDGs for the huge domestic market of Brazil is nothing. So you will say that all the DDG will be for Brazil. But there are several things that we need to take into consideration. First of all, these levels that Brazil is having of production of DDGs and ethanol from corn are the same levels that we used to have in the US on 1994, 1995. Other thing that we need to take into consideration is that already this year, we had exports from Brazil of DDGs to Europe. We heard about a couple of combos Handymaxes being shipped from Brazil to Europe. So yes, it's happening. The thing that we need to take into consideration is that the blend mandate in Brazil. The blend mandate in Brazil is crazy. I mean, it's 27% the blending mandate over there. So yes, they need a lot of ethanol. And the other thing that we need to take into consideration that even when the ethanol production in Brazil has been from sugarcane, now it's more efficient to produce ethanol from corn than from sugarcane. So yes, you can see the trend, and sooner or later, we're going to have DDGs from Brazil around the globe. All right, sorry for being so fast talking, but I think that we are kind of late and everybody wants to go back to work. This is the most important part of my presentation. I'm going to try to slow down here. I know that you are tired of listening to me in my Mexican, and you need to go back to work, but this is the most important slide of my presentation, and it's almost personal. It is what I have heard, or what sources are telling me on how to use or assessments to manage the risk on the price. It is not a recommendation from my side. From my side, I am just sharing what I have heard or seen on how to use or assessment. Yes, we can do a lot of analysis with our data, but we can use that data to make indexations and to management the price risk on DDGs. I used to buy cattle and other feed ingredients for a feedlot back in Mexico, including DDGs. DDGs is an amazing product. We all love it in the industry. It has energy, you have protein on it, it's easy to move, it's easy to handle. And the ethanol industry has done an amazing work developing DDGs for the feed industry. I mean, you just see it with the presentation of Kyle and Ron. They put a lot of effort to make DDGs available for the feed industry. But the problem, the big problem, is to manage the risk on price. Our nutritionists back in Mexico in the field that I used to work, used to complain that the price of DDGs moved in short periods of time, which also moved the cost of the feed ration in short periods of time. So it was always a problem to balance the cost of the ration using DDGs. And they asked me in Mexico, to buy as I did with the corn, buy 90% of our needs at the time of the harvest for the next 4-6 months and set a price. In the corn, I could do it because I manage the price risk with futures and options. Corn had a fixed price in the field ration, and if the prices fell, we will recover with the futures or options. But I could do it with DDGs. We did not have a way to manage the price risk on DDGs, which makes us just to buy most of the time from hand to mouth or just on a small lots or more volumes, just looking for the lowest offer. The best we could do back then in Mexico was to average the price by buying at different moments. We liked the price, we buy the 20-30% of our needs. We liked the price some weeks later, we buy another 20-30% of our needs, and so on until we covered our needs. We were aiming, or better saying, we were hoping to get an average to the market. Sometimes we were in the average, sometimes we were below the average, and sometimes we were above the average. Now with S&P Global Platts DDGS assessments, we have more and better options to manage the price risk. So what I have heard is that you can set a physical contract for assessment. First, you calculate your basis for assessment. What is the premium or the discount of your price on your destination or delivery point against last assessment? Then you set a physical contract going forward using the average of our assessment, 5 days, 10 days, weekly or monthly, the last 20 days, the first 20 days. You can do it in the way that is better for you. For example, if we are now in July and you want to contract August deliveries, you can set a contract, let's say for a premium of $1 per short ton over the average of Platts assessments in August. That way you are contracting right now, and you can at least secure you will have the average of the market for August, because you will use the assessment that we have on daily basis, and you will use it to settle your settlement, to settle your average, and you will price your DDGs according to that index. And perhaps you can use contract a percentage of your needs using the average mechanism and leave another percentage open to try to capture lower levels. All right. Another mechanism that I haven't seen or heard is pricing financially settled contracts. Here, you set your physical contract as usual. I want to buy this amount of DDGs at this price. But now you can use Platts settlement price to settle a financial swap. So you buy your physical DDGs, but you sell DDGs on an OTC financial swap. Only cash flow exchange, no physical delivery. For example, I buy the physical at $150 per short ton, and I sell in the OTC at $150 per short ton. And if prices drop, I recover it in the financial. That's another way to manage that price risk. And another use of our assessment is on risk management and on risk management of prices for accounting of financial audits. If you already have a position in DDGs, who will determine the market value of your purchases or your inventories? Who will be the impartial entity to set the value of your inventories or positions? So you can use Platts assessments. So that was more or less by personal experience that what I have heard on how to use our assessments to manage the price risk on DDGs. And on this slide, you can see what is the life cycle. Right now in DDGs, we are here. We are assessing the, and the next step is to get OTCs financially settled through brokers contracts On this case, for example, on Brazil, for soybeans on Brazil, we have more than 200,000 metric tons already contracted by OTCs. And as the assessment start to get traction and more market participants start to accept it and use it, then we can jump to an exchange here financial seller futures, like Black Sea wheat. We have also Australian wheat and Black Sea corn and Black Sea sunflower oil. They already listed on the exchange with CME. SCME has just announced that they will use they will use soybean assessment to set a financial to set a futures financial contract using our numbers. So I hope that I want to see more OTCs or DDGs using our assessments, and I hope that sooner than later CME is going to be listing the futures contract for DDG. You're more than welcome to participate in the discovery price process. If you want to participate on the process of the assessment, you are welcome to talk about the market with me. This is my contact information. Like I said, the presentation is going to be available to everybody that attend the webinar. And you can contact me to talk about the markets. And you can contact Mana Novakovic. You have more questions about the tools that you can use to manage the risk in the price of DDGs. You can contact me. That's it from my side. And thank you to the council for this.
Thank you, Sergio. At this point in the webinar, we will accept questions from the audience. If you have a question, there's a raise your hand feature. Please press that, and I will unmute you so you can ask your question. Is there any questions on any of the presentations? Okay, at this time, we do not have any questions. Oh, we have one that came through. Okay, we do not have any questions at this time. Well, thank you all very much for joining. I appreciate it, and we will send out a link after this to make the webinar recording available to anybody who missed it. Thank you, and I appreciate your time.